For more on the Fed's decisions and questions ahead for central bankers, let's bring in Rich Clarida, former vice chairman of the Federal Reserve and global economic advisor at PIMCO. He looks younger. He looks more relaxed. He looks. It's life is good, is it not?
There is life after the Fed, for sure.
It's hard. It's hard work. I sound like W. It's hard work, don't I?
I worked for him too.
Yeah, the decider. It is hard, and I have a lot of compassion or empathy for what Chair Powell and the rest of the Fed are up against. Everything's nuanced. Everything's gray. Did he say the right things? Are we on the right path?
I think we're on the right path, but the chair does have a complex message, again, signaling 3 rate cuts, but inflation is obviously not 2%. The goal is 2%. So he's trying to convey a message that they're going to start cutting with inflation at 2 point something, and if anything, they revised up the economic outlook. I can see why markets liked it.
Is
because
that messaging? You think that this was his shift to say, okay, inflation doesn't have to get to 2%? This is...
Well, I think that shift has been in play for a long time. It was hypothetical a year ago when I did your show. Now it is actually 2 point something. But yes, I think they believe that it is appropriate in the baseline to start cutting before inflation gets to 2. He was very clear in that press conference. There's two-sided risk now. I think the last time I did your show, I said they're only looking at inflation. Now they're looking at the risk that if they keep rates high for too long, pushes the economy into a downturn. So they're trying to navigate a pretty careful landing right here.
I thought it went from one side to the other side, not two-sided. It very strangely went from inflation to recession risk.
Well, what I think is going on here is the delicate balance that he's trying to navigate is financial conditions will very naturally start to ease when they get the sense the Fed is done in cutting. And then, of course, that improves the economic outlook and potentially makes it harder to get inflation down to 2. What was interesting, Joe and Becky, at the press conference is when he got questions on financial conditions, he asserted, we think that they're tighter, but if you look at any indicator, stock prices, credit spreads, even rates, they're a lot lower than they were in November.
We've done a
lot easier than they were in November.
A lot of hard work with a good outcome so far, normalizing interest rates. Why give that back? Now we have some dry powder for the next thing that happens.
And why cut now?
That's right.
Yeah. Well, no, it's really, again, not mission accomplished. But
you're not sold. I can tell you're not sold on whether we should cut.
I think there's more two-sided risk here that inflation stays sticky and stubborn. And I think that's a risk they should be willing to take to start cutting. But you shouldn't eliminate or ignore the fact that there is a risk, And I'll make one point. The Fed targets PCE inflation. Sorry, it sounds a little wonky for the crowd, but the CPI index, which I think people understand better, is somewhere in the high 3s. In fact, the last 3 months running at 4. So if the Fed were targeting CPI right now, we wouldn't even be discussing rate cuts.
Well, you must be convinced, or Chair Powell must be convinced that we're restrictive.
Oh, yes, he asserts that, and the Fed believes they are restrictive.
That's the only reason to even be considering cuts.
Oh, sure. In fact, a very good point, because when he gets questions along the lines of what if the inflation's more sticky and stubborn, he's not really suggesting any more rate hikes. He's just saying we can stay on hold longer. So that is the thinking on the committee.
You think there's a chance that they make it through this year without any rate cuts?
Becky, there's always a chance, but I think they think not only that they're done, but that they're going to be cutting. The dots indicate that. Obviously, the dots have their problems, but the dots indicate that. So, yes, there is a chance, but I think under a pretty broad range of scenarios, they're going to get at least one cut in this year.
That's amazing.
It's not 3.
Potentially not 3. Let me say this, and maybe here I should say this may be more of a hope than a forecast. I do hope that the Fed really moves into data-dependent mode, because there can be a very good case, if inflation is sticky and stubborn, that they shouldn't deliver 3 cuts this year.
If CPI is high for another month,
yeah,
I mean, that would be, I think, all you would need to see to say, hey, we're not doing anything till we see where this is headed.
Well, but I think they've now had 4 press conferences in a row, November, December, January, and now March, where they're basically signaling they want to get that rate cut in. So I think it's going to happen.
Do you think any of that is tied to the potential for some of the smaller banks to run into trouble if they don't get rate cuts because they have commercial real estate and other things on their books?
I think probably not. I think they have a pretty good sense that the banking system as a whole has a lot of liquidity. Capital is very profitable. And I think they have the tools to deal with individual situations if they need to. So my sense is that that's not a driving factor right now.
They supposedly respect the lag, I guess.
Yeah.
Do you think they know anything that's not public knowledge about some weakness somewhere in the economy? Because if the economy stays like it is, if the S&P keeps hitting new highs, if, Bitcoin and speculative assets.
My son today texted me, look at Reddit, Dad. I don't even know what Reddit is.
If all these things keep happening, I just don't, and they really don't know that the economy is facing we talked about, that's not the Titanic, but maybe there is something under the water. You just see the top of the iceberg, and maybe there is something big. Is there something big under the water?
Well, not that I know. I think everyone, including the chair in the press conference, acknowledged that everyone knows that commercial real estate, central business district office, is not coming back to where it was pre-pandemic, and that exposure is in both the banking system and in the securities markets. I don't think they think anything is imminent. It's more of a slow burn, a slow grind through revaluing and liquidating those assets.